good morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, it has been a great weekend with the West Indies wrapping up their series win, but today we're talking about the financial markets, and we're talking about another potential winner, and we're talking, of course, about Guardian Holdings Limited for their financial year ended 2020, and we're also going to touch on a couple other investment-related matters occurring in terms of acquisitions and mergers in the financial space. So let's turn firstly to Guardian Holdings Limited, and for their financial year ended December 2020, the group recorded an earnings per share figure of $3.34, which is a 12.1% increase from the $2.98 recorded in the prior comparable period. Now that's a pretty good performance, notwithstanding all of the volatility that would have taken place in the fiscal 2020 year or the calendar 2020 year arising out of the COVID-19 pandemic and its impact on investment markets. Net income from insurance activities were up 47.4%, and net income from all activities, including investment and brokerage, was up just around 4.1%, from $2.4 to $2.54 billion. Operating expenses actually declined from $1.38 to $1.37 billion TT, and profit before taxes increased 20.6% from $847 to just over the $1 billion mark. Profit attributable to equity holders of the parent increased just around 12%, from $692 to $774 million. Now, when we take a look at net income by activity, there were some significant changes. However, on an overall basis, there was moderate increase in that net income figure. As mentioned, that the overall figure increased by 4.1%. Net income from insurance activities actually increased a whopping 47%, from $959 to $1.41 billion, on the heels of more benign weather-related conditions, which would have led to lower claims, and that would have significantly improved over the fiscal 2019 to fiscal 2020 period on a relative basis. We saw net income from investing activities decline just around 28%, from 1.37 to just around 1.37 billion to 989 million, and that really was driven by weaker performance in investment markets. Overall, that has since recovered coming into the new year to some degree, so improving financial markets should be supportive of GHL's performance, at least into the first quarter of 2021. And we can see also there was a 23 to 24% increase in net income from brokerage activities, moving from 117 to 144 million. So the Guardian Group continues to make strides in that particular aspect of their business or revenue generation. Now, one of the less than stellar trends that would have taken place for not just Guardian, but for most companies in 2020 would have been the significant reduction or total elimination of a dividend. And that was no exception for Guardian. We can see that while their earnings would have grown on average around 18% over the past couple of years, and there would have been a modest increase of around 4% annually in terms of their dividend. From 2016 to 2019, there was no dividend paid for the fiscal 2020 year, and that would have been slightly disappointing to some investors. However, take that with a grain of salt. There would have been certain restrictions placed by central banks, which would have restricted dividend payments from leaving countries during the time of pandemic, as well as other issues, which we will discuss shortly. So at a price of $23, Guardian is trading at a price-to-earnings ratio of 7 times, which is significantly below the level of its comparable sector of 12 times. And again, that dividend yield is 0% currently, compared to the sector average of 0.6%. Now, on the basis of the NCBIC acquisition, which was announced earlier in 2020, financial market improvements, but tempered by a sluggish economic recovery, Bourse is going to maintain its neutral rating on Guardian for now. However, one of the big announcements that took place recently was that cross-listing announcement for Guardian, in which it is going to return to the Jamaican Stock Exchange after roughly 7-year hiatus, having delisted most recently back in December of 2013. Now, that brings with it certain opportunities, and things have certainly changed since that time. Most importantly, the change in ownership, with NCB Financial Group now owning just over 60% of Guardian Holdings Limited. And of course, it does present an opportunity for Guardian Holdings to add or attract more capital for acquisition opportunities should they arise, and the likelihood is increasing in this particular environment across the region. Now, turning quickly to some of the recent developments, and speaking of acquisitions, First would have announced its acquisition of Scotia's banking operations in Guyana, as well as more recently a 19.9% acquisition or stake in Term Finance Limited, which is an online micro-lending regional company. So that is certainly an indication of First's intention to grow and expand throughout the region. We would have noted quite interestingly that Agostini would have announced that it is in the process of acquiring Oscar Francois Limited and Intersol Limited, as well as Grace Kennedy's acquisition or announcement of acquisition of Scotia Insurance Eastern Caribbean Limited, as well as the popular 876, that should be 876 Springwater brand based out of Jamaica. So certainly some developments for publicly listed securities. We are seeing that they're putting their capital to use in terms of acquisitions, and that should bode well, all other things being constant, for investors over time. Well, that's it for this week's edition. For more information, give us a call at 226-8773, email us at invest@boursefinancial.com, or check out our website, bourseinvestment.com, where this and all of our other research is absolutely free for your enjoyment. And of course, you can check us out on the bigger, better business section of the Trinidad and Tobago Guardian. Until next time, see you. This has been the Bourse Report.